Hello guys, here is a quick update of two Nifty 50 stocks that have rallied quite a lot in the last 1 year but now facing short-term correction. Although they have bright growth prospects in the future because of increased government spending towards infrastructure and also due to the rise of realty sector in India. Also, we'll discuss one more company from the mid-cap index which is looking very promising and it is waiting for a breakout from the current levels. So as usual, I'll give a short introduction of the company and also will mention the important support levels for long-term investing, which can also be applied for quick swing trade opportunity. Having said that, this video is not a stock buying recommendation. Please use this video as a guide to do your own analysis before investing your money. Okay, let's get started. The first stock in our list is ULTRATECH CEMENT. Company is a market leader in this commodity segment and controls 25% of all the cement manufacturers in India combined, with installed capacity of 2 times that of the second largest player in the market, which is the Adani group of companies. What's more interesting is that the company, along with acquisitions of smaller cement manufacturers, is planning for a capex of 30,000 crore over the next 3 years to build two new plants in Tamil Nadu and Chhattisgarh, thereby aligning with the government infrastructure plan to build 30 million rural households across India and also in the expansion of national highways in the next 5 years. It is important for us as investors to know these metrics because the foundations laid by the company today will reflect in the top line and bottom line growth over the years and will eventually reflect in the stock price performance. So we can see the pattern of ULTRATECH cement and it is mostly been in an uptrend and it broke its trend in 2020 and from here we can see a new retracement pattern. So this is an interesting chart pattern where we can see that the stock price increases rapidly in a short duration and it is followed by a consolidation with negative bias. What's more interesting about the flag pattern is that it usually indicates the movement of the stock price in the same direction. And we can see that in the recent days, the stock price has increased rapidly and now the stock is consolidating again with a negative bias. So these patterns just indicate the direction of movement of the stock price. But how do we identify the trend reversal zone, for which we'll use the Fibonacci retracement and RSI indicator. So when we check this zone, we can see that the stock is trading near to the support trend line, which is also near to the Fibonacci retracement level. And also when we check the RSI indicator, it is showing a buy signal because the value is less than 10 in the monthly time frame. Likewise, I expect the stock to follow similar pattern and either take support at the 78% fib level or at the 62% fib level, and by simultaneously checking the RSI indicator values. Let's also check the chart pattern of Ambuja Cements, which is the second largest player in the cement manufacturing industry. We can see that the stock has been very volatile and whenever it is retracing, it is bouncing back from this support trend line. And when we observe in the recent days, we can see there is a pullback. So I expect the stock to move down in the coming months to touch either one of these fib retracement levels before bouncing back again. Let's wait and watch what happens. I'll keep you updated in the community section. Okay, the next company which could benefit from the infrastructure theme is Larsen and Toubro. This company we can say is a backbone for all the major infrastructure developments in India. Company is involved in EPC of projects across sectors which include airports, railways, hospitals, factories, data centers, stadiums, business and IT parks, and also the recent Ram Mandir project. Company is not only limited to operating in India, but it is operating across the globe, mainly in Southeast Asia and Europe. Also, it is not only involved in infrastructure projects, but it is a parent entity of LTI Mindtree and LTTS, which are involved in IT services and engineering solutions respectively. So, company received order inflow of 3 lakh crore in FY24 and the total order book stands at 4.8 lakh crore as on 31st March. Just for a comparison, the total order book of the company is larger than its market cap. It's insane. So this is a decadal investment opportunity and also going forward when the interest rates are cut, it can positively impact the net profit margin of the company. Okay, let's check the chart pattern of Larsen and Toubro. Okay, we can see that the stock has been very volatile when trading within this region. And after 2020, it broke the resistance line took a retracement and made this as a new support and bounced back from here exponentially. And in the recent times, we can see a pullback again from the all-time highs. I'll show you an interesting chart pattern when we switch to the day time frame. The stock has formed a head and shoulder pattern. So this is a bearish indication of stock price movement. And when the neckline is broken, we can expect the stock to move down further. So to calculate the target price, we can measure the distance from the head to the neckline and extend the same amount in the bottom side, which gives a target price of 2600. We can verify this using the Fib retracement level and the RSI indicator, for which we'll move to the monthly time frame. It is interesting to note that the calculated target price is also matching with the Fib retracement level. So presently the stock is trading near to the neckline, and when it is planning to move down, we can expect the stock to reach this level to take a support and bounce back. We are in the screener window and I would like to clarify a point. We can check the debt to equity of the ratio is high, and usually investors are comfortable with a value which is less than 1 or 0.5. But please note that the company is involved in infrastructure development, which is a capital intensive business and hence requires a lot of debt to finance their projects. So a better metric to check would be the interest coverage ratio. We can calculate this ratio by dividing the EBIT of the last year by the interest repaid, which comes around to be 3, which is very much reasonable for the company. Also, the downside target can be identified using the PE ratio. Here we can check in the maximum time chart, and when we check in the recent times, the stock is trading with a PE of 34. So from the past, we can identify that whenever the stock is trading with a high PE, it is again moving to its median PE. So in the future, when the stock trades near to its median PE, its price would have corrected to levels of 2600. You may have one question to me right now. These stocks are very costly, and just to buy one stock of these companies, we need to invest a large capital. Okay, I'll ask you this one question. If you are comfortable with buying 1000 shares of Vodafone India at the price point of 10, but do not want to invest in these fundamentally strong companies, even though you are investing the same capital, think again and choose wisely. One pro tip here to save a lot of money. You won't believe, but I am able to save 3000 to 4000 rupees just by cooking my own food and by restricting outside food to 0 or 1 meal per day. And that's how I'm able to gather a lump sum amount to invest in these fundamentally strong companies. If you are new to this channel, consider subscribing because you may not be able to find it later on. Expect to see fitness related content in the upcoming weeks along with the stock analysis video with technical discussions. So people usually say that sell in May and go away, and that is what is happening with these three companies. But the next company in our list is trading near to the all-time high, and mutual fund houses like Parag and Quant are bullish on this stock and have increased their stake significantly in the recent quarter. Company is a sugar manufacturer that would benefit from the ethanol blending process. It is EID Parry. You might know this company from a famous advertisement by a popular chef. Although there is a recent ban in use of sugar syrup for ethanol blending, it is only for short term, and the government has set a target of 20% ethanol blending in petrol by FY 26-27. Also, when I checked the recent annual report, company has mentioned that it is shifting its business from low margin industrial sugar to high margin consumer sugar, and that is the reason DIIs are very much bullish on this company and have increased their stake. Okay, let's check in the trading window if the company is worth adding in the present levels. We can see that the stock has been very volatile within this region, and after 2021 it was able to break out from the resistance trend line and formed a new pattern, and it is now trading near to the all-time high. So this is an interesting chart pattern and it indicates a bullish movement in the stock price. This is very much similar to the head and shoulder pattern we discussed in the Larsen and Toubro chart, but it is inverted. So a breakout from the brim of the cup can be confirmed when the stock moves higher from these levels with huge volumes. And when that happens, we can calculate the target price by measuring the distance from the bottom of the cup to the brim of the cup and by extending the same amount in the upside, which gives a target of 30% upside from here. So am I buying in these levels? The answer is no. I am waiting for the breakout to happen for the stock to give a clear buy sign indication. I will keep you informed in the community section when this happens. If you like this video, give it a thumbs up, and that's a quick discussion of 4 companies that could benefit from the election results and the government planning in the next 5 years. And these are the top 5 undervalued stocks in Nifty 50.